Hey, good morning. Let's go over today's trade plan. So the bullish time frame alignment continues to be in effect, and heading into the open, we're going to be using the 46.5 to 48.5 area as the micro bull bear zone. So as long as the buyers are holding ES above 46.5 to 48.5, they can maintain that short-term bullish control, and then on the upside, the market's making fresh all-time highs, so there is no hard resistance. But given the recent ranges, if the buyers can hold ES above 46.5 to 48.5 and successfully maintain this overnight breakout, then we could go up to 55 to 57 and potentially 61.5 to 63.5, at which point the market would be quite exhausted on the day time frame, and there may not be much more upside left beyond 61.5 to 63.5. But again, keep in mind that there is no hard resistance up here, and these resistance zones up here are simply based on the range expectation on the day. Now, in the event that the buyers fail to hold ES above 46.5 to 48.5, we could see a shift in at least short-term control from the buy side to the sell side, and that can lead to a move down into the overnight low of 42.75, and then the first area of decent support is down at 34.5 to 37. So for today, how the market trades in relation to 46.5 to 48.5 is really going to help us figure out our intraday bias. As long as the market's holding above it, we know that the bullish time frame alignment is still in effect and the buyers are in control, so the market can head higher into 55 to 57 and maybe 61.5 to 63.5. But in the event that this overnight breakout fails and the market drops back down below 46.5 to 48.5, then we could see some more profit taking come into the picture, and that can lead to a move down to 34.5 to 37, where responsive buyers can be active on first test, and from there responsive buyers can be active on first test of pretty much every support zone, especially given that the overall bias continues to be quite bullish. So that is the market context heading into the open. Now the challenge with this kind of market is finding a good enough price area to get on board where you can get at least 2-to-1 reward to risk. And the other challenge is that the market is getting a bit extended up here. Since the beginning of the year, we've gone pretty much straight up for over 75 points. And that just makes you question how much more is left, at least on the smaller time frame. Because since the beginning of the year, we haven't really had any kind of decent pullback. The market has pretty much gone up in a straight line. And when that happens, eventually the market gets quite exhausted and we end up getting a bigger pullback than expected. So we are going to continue to give edge to the long side, especially above 46.5 to 48.5, but we also have to be mindful of our own psychology and make sure that the fear of missing out doesn't get us into poor trades where the reward to risk is questionable and there's really no clearly defined trade idea. So above the micro bull bear zone, the focus is going to be on the long side, but we still need to find a good way to execute that idea. And if in real time the market doesn't really provide us with a good enough entry with at least 2-to-1 reward to risk, then it's better to sit out and let it go rather than try to chase it, get involved at a poor price, and then end up getting stopped out on a minor pullback and then later see the market go higher anyway. So you need to make sure that when it comes to execution, there is sufficient reward to risk on the entry you're taking, that the stop is actually placed at a level that makes sense, that actually invalidates that short-term trade idea, and all of those trading principles really need to be kept intact, and you can't allow the fear of missing out to drive your trade executions. So those are the main thoughts heading into the open today. Let's see if the buy side can maintain control and hold ES above the micro bull bear zone, and we'll take it from there.